Alexforbes has given its shareholders a reason to smile. The financial services group has declared a special dividend. Investors will receive a payout of 10 cents a share. That's as the firm has successfully litigated phase 1 of the enhanced transfer value liability matter. That related to a 2021 warranty claim from a known error that required redress relating to a UK subsidiary sold in 2012. In addition to the special dividend, shareholders will also receive a final payout of 33 cents per share. That's up 10% from a year ago and takes the total for the period to 55 cents. This follows a strong financial performance from the group. For the 12 months to end March, operating income rose 13%, while headline earnings per share from total operations increased 15%. Omnia has declared a special dividend. Shareholders will receive R2.75 per share. That's in addition to the ordinary dividend of R4 per share. This is the second year running that the chemicals company has made a bonus payout to investors. The firm says this is in recognition of its confidence in the sustainability of the company's earnings. For the full year, headline earnings per share rose a marginal 1%. That's as the group's growing explosives business helped offset the impact of bad weather and economic turbulence on its African agriculture business. PPC has reported higher full-year earnings. That's after a step change in margins and cash flow, and that's as a result of cost improvement initiatives that form part of the cement maker's turnaround strategy. CEO Matthias Cardarelli says the firm is becoming more competitive and better prepared to deliver an enhanced value proposition to its customers. Looking ahead, PPC expects incremental improvements for the business in 2026 and 2027, with the next step change seen in 2028 after its new integrated plant in the Western Cape comes online. Oceana has suffered a profit hit. The fishing group has posted a 44% plunge in half-year headline earnings per share. The slump was largely driven by a drop in fish oil prices. This wiped out an improved performance at the company's South African operations and strong results from Oceana's flagship Lucky Star Foods division. Despite this, an interim dividend of 110 cents has been declared, although that is a more than 43% reduction on last year's payout. Avenger expects to slip into the red. The engineering-led contractor says it should report an annual loss. It's pointed to headwinds facing its Australia business unit, particularly the Kidston pumped hydro project, which was hampered by the impact of a tropical low-pressure system. And that's resulted in the estimated cost to complete the project increasing. Avenger is set to open its books in August. A wage deal's been inked in the plastics sector. NUMSA has signed a multi-term above-inflation agreement with 5 employers in that industry. The deal would see workers getting pay increases of 7% effective July and a 6% increase the following 2 years. This brings an end to wage talks that kicked off in April, where NUMSA initially demanded a 1-year 10% wage increase across the board. The CEO of Plastics Converters Association of SA, one of the signing parties, says the 3-year duration will ensure stability and sustainability within the plastics industry for employers and employees. In international news, China's May export growth slowed to a 3-month low as U.S. tariffs slammed shipments, while factory gate deflation deepened to its worst level in 2 years, heaping pressure on the world's second largest economy on both the domestic and external fronts. Here's more detail in this report.
There were more signs Monday that US tariffs are starting to bite in China. New figures showed exports rising just 4.8% on the month in May. That was well down on April and the slowest rate for 3 months. Imports also tumbled far more than expected. Overseas shipments had surged earlier in the year as US firms rushed to stock up on Chinese-made goods before the tariffs kicked in. That meant some slowdown had been expected later in the year, but May's figure was still worse than forecast. One analyst said exports were probably also hit by tough customs inspections, with China looking to enforce its own curbs on shipments to the US. Monday's figures also showed declines in Chinese imports of oil, coal and iron ore, adding to signs of weak demand at home. That also showed up in producer and consumer price data. Both extended declines, with producer prices dropping 3.3% in May, the sharpest contraction in 22 months. In a symbol of the sagging demand, US coffee chain Starbucks said Monday it would lower prices in China for some iced drinks. Now the numbers are likely to increase pressure on policymakers to step in with more stimulus measures. Beijing last month rolled out moves including cuts to benchmark interest rates, with more steps now widely expected over the course of this year.
And 3 of US President Donald Trump's top aides are meeting with their Chinese counterparts in London for talks aimed at resolving a trade dispute between the world's 2 largest economies that has kept global markets on edge. Let's take a look for more detail.
The US and China are set for a new round of trade talks Monday in London. Washington's team will feature Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick and Trade Representative Jameson Greer. China says Vice Premier He Lifeng will be in the UK capital for the whole week. Posting on social media, Donald Trump said the meeting should go very well. Last week he spoke to Chinese President Xi Jinping, marking a rare leader-to-leader call. The discussion didn't produce any obvious breakthrough, but the pair agreed to visit each other in the future. Both countries face pressure to strike a deal, with the trade war sparking widespread concern for global growth. US firms have also been alarmed by Chinese curbs on shipments of rare earth minerals, which are vital to car makers and other sectors. Meanwhile, companies in China face US restrictions on the supply of key goods, including chip design software and parts for nuclear power plants. In May, the two sides did agree to a 90-day deal to ease some of the tit-for-tat tariffs they had imposed on each other. However, the truce has sometimes looked fragile, with Trump at times accusing Beijing of violating its terms. The deal also failed to address broader sources of tension, including US accusations that China permits the illicit flow of fentanyl across its borders.